Fiona, we talked a few moments ago about making sure your tax return is filled in on time and the key dates.
Yep.
But it sounded to me as though there was many opportunities where people could actually go wrong filling in a tax return at all. They say it's easy when it's done online. Somehow I doubt it. So where do people actually go wrong?
Well, I think the first thing is as an entrepreneur, you believe that you should be able to do everything yourself. And but really, your main job should be focusing on your business and building up your business. So the more you delegate to other people, such as bookkeepers and accountants, the better. So that's the first stage. The second stage is because people are busy, they tend to miss deadlines, or they might put their head in the sand. So, for example, if you're setting up a business, you're going to be having all these things that you need to get done by a certain time frame, and the important things that you might miss are the statutory ones that you really don't want to be thinking about. So what I tend to find is that people come to me after, say, about 6 months and say, I'm pretty certain I should have registered with the tax authorities, but I haven't done it. And what they're not aware about is the fact that they should have done it within 3 months of having set up their business.
Is there a penalty if you don't?
Absolutely,
I thought
yes.
there might.
Yes. Well, the point is that during that time they should have been paying weekly national insurance contributions. So that's why it's important to register for self-assessment so that you can make sure that you're paying those contributions. If you don't register in time, then obviously HMRC is going to charge you penalties and possibly interest on the amount due by that time.
Fiona, there's one thing that people are getting quite excited about at the moment, and I'd like you to explain it a little bit more to me. It's the child benefit tax credit. Now, it's changed and people are getting excited about this. What exactly is that?
Okay, well, this is something that the government announced in the 2012 budget, and it's been brought in for the 2012-13 tax year, but it only relates to the last portion of the tax year. So for a family that has been claiming the child benefit from the 7th of January 2013 to the 5th of April 2013, if one of the partners earns between £50,000 and £60,000 and upwards, then they will need to have registered for self-assessment, if they're not already, by the 5th of October 2013. Because the child benefit will be clawed back for earners above £50,000 at a rate of 1% of the child benefit paid for every £100 earned above £50,000.
So what you're saying, I think, if I understand this correctly, is that they give you the tax credit on one hand and they take it away with the other.
Okay. Absolutely. And in fact, with regards to the 60,000, once they reach £60,000, the child benefit is completely clawed back, so they'll have nothing left.
And that's for one earner.
That's if the family has two earners, then basically you could end up with a situation whereby the person responsible for the child takes the child benefit, but the person who is the highest earner in the relationship will actually be paying the tax effectively on that child benefit.
Okay.
It's quite unfair, really, because you could have a situation, for example, where you've got one family with two earners who both earn £49,999, for example. So they have a combined gross income of almost £100,000, and they will continue to get the child benefit. But you might have another family with only one earner, and that person is earning £60,000, and the other person isn't earning anything, but they're taking the child benefit. They will actually lose that child benefit completely. There are other difficulties. For example, not all families tell each other how much they earn, for example. And other difficulties are that you may not necessarily know that your earning above a certain amount until after the 5th of October deadline, when you should have told the taxman that you needed to register for self-assessment.
If you run a company and registering, obviously you mentioned the national insurance contributions and things like that. Are there any other elements that if you're running a company that one would need to be aware of where you could go wrong?
Yes, absolutely. Well, it's slightly easier if it's a limited company than if it's self-employed or a partnership. With self-employed or partnerships, that's where the national insurance contributions come in. With a limited company, once you set up the company at Companies House will then let HMRC know that a company's been set up. So HMRC already know about the company before you start having to run into deadlines, and they will notify you in time. But it's the people who set up as sole traders or partnerships that could get tripped up. But there are also important tax reliefs that people may not be aware of if they're trying to do it themselves, for example.
And therefore could miss something on one of those forms that are supposedly easy to fill in.
Well, that's the thing, is that very often there are business expenses that you can claim and some that you can't claim, for example. And it's important to know the difference. So, for example, customer entertaining is not allowable for tax purposes. So you need to make sure that you don't include that in your VAT calculations or in your self-assessment calculations.
Okay, still sounds a minefield to me. So I'm feeling as though that you might be able to help. So in a few minutes, what I want to talk to you about is about how an accountant can truly help with the self-assessment tax return forms.
Okay, absolutely. Thank you.